Hey there, crypto enthusiasts. Ever thought your dusty garage could be a treasure trove, not of old bikes and forgotten paint cans, but of booming digital wealth? Or that your love for collectibles could actually make you part of an economic revolution? Welcome aboard the hype train to the wild world of digital assets and tokenization, where your physical assets aren't just possessions, they're potential profits waiting to be unlocked. From the mysterious mazes of MiCA regulations, House Rule 8464 and FIT21, to the daring dives into digital dollars, we're unpacking how the world's wallet is getting a serious tech makeover. And trust me, it's more exciting than finding free Wi-Fi. So don't miss out. Let's decode the future together and find out if tokenization is the financial revolution we've all been waiting for, or just another digital pipe dream. Welcome to Crypto Dominion. I'm Alison, here to navigate the exciting world of cryptocurrency, NFTs, and blockchain. Hit subscribe for a deep dive into digital currencies with a fun twist. Stay tuned. We're also giving away a sleek MacBook. Just like, subscribe, and comment to enter. Make sure you watch till the end for all the details. Let's embark on this crypto journey together. Ready to explore? Let's jump in. Introduction to real-world asset tokenization. Ever thought about slicing up a building into a million digital pieces? Probably not, but it can mean profits in ways you never imagined. Welcome to tokenization, the blockchain buzzword that's not just a fancy dance move. This is where we take the boring old rights to an asset and turn them into digital tokens on a blockchain. These digital tokens represent ownership or a stake in real-world assets, ranging from real estate and art to commodities and more. It's like turning your assets into digital Pokemon cards, collect, trade, and maybe even make a buck. This innovative process leverages blockchain technology to enhance the liquidity, transparency, and efficiency of asset transactions. Tokenization effectively bridges the gap between traditional physical assets and digital finance, opening up new avenues for investment and asset management. Tokenized real-world assets, RWAs, have begun to significantly influence both the global financial ecosystem and the burgeoning crypto markets. By converting physical assets into digital tokens, these assets become more accessible to a broader range of investors, potentially increasing market participation and liquidity. This not only spices up the investment game, making previously gated assets as accessible as a public park, but also gives the volatile crypto markets a taste of the real world, stabilizing them with tangible assets with economic value like real estate and gold. Real stuff for digital bucks. As the scale and impact of asset tokenization grow, so does the attention from regulatory bodies worldwide. In the United States, the Financial Services Committee hosted a hearing on June 5th titled Next Generation Infrastructure: How Tokenization of Real-World Assets Will Facilitate Efficient Markets. This hearing aims to address the need for additional regulations that could further streamline the development of tokenized assets and derivatives. Legislation such as the Tokenization Report Act of 2024 is currently under discussion, which mandates a comprehensive report on the state of blockchain technology in asset tokenization, highlighting the need for ongoing dialogue and potential regulatory updates to accommodate this advancing technology. Legislative spotlight. In the evolving landscape of digital finance, the House Rule 8464, known as Tokenization Report Act of 2024, stands out as a pivotal piece of legislation. While the Financial Innovation and Technology for the 21st Century Act, FIT21, lays foundational regulations for integrating digital innovations with traditional financial systems, HR 8464 specifically targets the burgeoning field of tokenizing real-world assets, from commodities like gold to tangible properties such as real estate. HR 8464 not only aims to make these markets more accessible and liquid, but also mandates a thorough exploration into how tokenization can reshape financial landscapes. This act requires the preparation of extensive reports to evaluate the current state of asset tokenization and forecast its long-term effects on both market dynamics and regulatory frameworks. The insights gained from these reports are expected to guide future legislation, ensuring that the integration of tokenized assets is both innovative and secure. By focusing on tokenized assets, HR 8464 seeks to break down traditional barriers to entry in investment markets, democratizing access to high-value assets. This act is more than legislative text. It is a strategic blueprint for a future where digital assets are as routine as stocks and bonds, setting the groundwork for new international norms in the trading and management of digital assets. With HR 8464, lawmakers are not just reacting to current trends, but proactively sculpting the future of digital asset management. Tokenization trends and perspectives. The tokenization of real estate and commodities is revolutionizing how these assets are traded. By converting these assets into digital tokens, barriers such as high entry costs and complex acquisition processes are significantly lowered. For instance, real estate tokenization allows for fractional ownership, enabling multiple investors to hold shares of a property and thereby enhancing market liquidity. In the commodities sector, tokenization simplifies the trading and management of assets like gold and oil. Blockchain technology offers more accurate and transparent tracking of these commodities' provenance and ownership, enhancing regulatory compliance and reducing fraud. This opens up commodity markets to smaller investors previously overshadowed by large institutions. Furthermore, stablecoins are becoming a staple in the digital economy, linking the volatility of cryptocurrencies with the stability of traditional fiat currencies. Pegged to stable assets like the US dollar or gold, stablecoins serve as a reliable medium of exchange for everyday transactions and as a hedge against crypto market volatility. Their integration is vital for streamlining cross-border transactions and enhancing banking services for the unbanked, with regulatory frameworks like the Markets in Crypto Assets Regulation, MiCA, poised to broaden their role significantly. Carlos Domingo, co-founder and CEO of Securitize, is at the forefront of the tokenization movement. His company has notably collaborated with financial giants like BlackRock on projects such as the Beetle token, demonstrating a significant fusion of traditional and crypto financial realms. Domingo champions tokenization as the backbone of future financial systems, advocating for its potential to redefine asset management and investment accessibility. However, the excitement surrounding tokenization is met with critical perspectives emphasizing caution and regulation. Professor Hilary Allen from American University Washington College of Law offers a contrasting view, highlighting the risks associated with the rapid expansion of cryptocurrencies and tokenized assets. Her core argument? Crypto assets lack inherent value, unlike traditional assets, which are backed by physical commodities or regulated financial structures. She argues that without thorough oversight, the adoption of crypto solutions could undermine the stability and security of financial operations. As tokenization evolves, the ongoing dialogue between diverse perspectives like those of Domingo and Allen is crucial. It informs stakeholders and influences legislative directions and market developments, ensuring a balanced integration of new technologies within existing financial and regulatory frameworks. This discourse shapes not just current strategies, but the very framework of tomorrow's financial landscape. Innovations and predictions in financial technology. Larry Fink, CEO of BlackRock, has articulated a forward-looking vision for exchange-traded funds, ETFs, and their role in the evolution of financial markets. His perspective underscores the potential of ETH ETFs as a stepping stone towards the broader tokenization of financial assets. Fink envisions ETFs as part of a technological revolution in financial markets, where the ultimate step is the complete tokenization of all financial assets. This development is poised to transform the investment landscape by making assets more accessible, markets more liquid, and transactions faster and more transparent. Similarly, Jamie Dimon, CEO of JP Morgan Chase & Company, although initially a skeptic of cryptocurrencies, has acknowledged the potential of blockchain and tokenization in transforming asset management. Under his leadership, JP Morgan has explored the Crescendo platform, a pioneering project featuring a next-generation portfolio management system. Crescendo enables seamless integration across different blockchain networks, which simplifies the management of multi-asset portfolios and reduces operational complexities associated with traditional financial systems. Dimon's change of stance is particularly noteworthy, moving from a staunch critic to a proponent of digital innovation. This shift is emblematic of a broader trend within the financial industry, where traditional skepticism is gradually giving way to cautious but optimistic engagement with digital assets. Through tokenization and blockchain, companies are not only able to enhance the efficiency and flexibility of their services, but also pave the way for new forms of investment that could revolutionize the market in the coming years. Global perspectives and regulatory frameworks. The trajectory for tokenized assets appears promising, with estimates suggesting an exponential growth trajectory leading up to 2030. Analysts predict this sector might significantly outpace traditional financial products, due in part to the enhanced accessibility and efficiency provided by blockchain technologies. This expansion is expected to encompass a broad array of assets, from real estate and classic commodities to more novel arenas like art and intellectual property. In terms of regulatory developments, both the United States and Europe are at pivotal junctures. The European Union is leading with the markets in crypto assets regulation, MiCA, which is set to take effect by June 30, 2024. MiCA aims to provide a comprehensive regulatory framework for managing crypto assets, ensuring consumer protection, and fostering innovation within a regulated environment. This regulation is expected to enhance the stability of digital markets and establish a standard that could potentially influence global norms. The US is also moving towards more structured regulation, with the Financial Innovation and Technology for the 21st Century Act, FIT21, and legislative measures like the Tokenization Report Act of 2024 shaping the discourse. These acts are expected to clarify the legal standing of tokenized assets and smart contracts, thereby reducing uncertainty for investors and companies alike. Furthermore, the expected approval of FIT21 and possibly a new stablecoin bill before the end of the year signals a proactive regulatory approach that could catalyze further growth in the sector. With these developments, the US aims to bridge the gap with Europe and other regions that have taken more decisive steps towards embracing digital assets. As these regulatory landscapes evolve, major platforms like Binance are already strategizing their responses. Richard Tang, CEO of Binance, has publicly addressed the upcoming MiCA regulations, assuring users that while unauthorized stablecoins won't be delisted, their availability to European Economic Area (EEA) users will be restricted. This strategic pivot underscores a broader movement within the crypto industry towards compliance and adaptation in anticipation of more regulated markets. Looking ahead, the intertwining paths of innovation and regulation will likely dictate not just the market dynamics, but also the pace at which newer financial technologies become mainstream. For the global market, the integration of these technologies promises enhanced efficiencies and an expanded framework for economic growth and inclusion. The wrap-up. The future of tokenized assets is intricately linked to the evolving regulatory landscape and the strategic moves of major financial entities. As we approach 2030, the proliferation of these assets, supported by robust legislative frameworks and innovative technologies, could very well redefine the boundaries of traditional finance, ushering in a new era of digital economic systems. Before you go, let's spill the beans on our giveaway details. We're handing out a brand new MacBook, not just any notebook, but one that might just auto-correct your life. Once we hit 50,000 subscribers, it could be yours. Just smash that like button, subscribe and comment away, the wittier the better. The more you comment, the better your chances. And hey, don't forget to hit that notification bell so you don't miss any of our shenanigans. Good luck. Now we turn the conversation over to you. What are your thoughts on the recent legislations for tokenization and digital assets? Do you think these measures will provide the necessary stability and security for the crypto market? And how do you see blockchain technology impacting the efficiency and security of traditional banking systems? We'd love to hear your thoughts. If you've got crypto fever so bad that you see the world in blockchain blocks, you're in the right place. Thanks for stopping by our channel, your hotspot for all things crypto. We're not done yet. There's plenty more where that came from. This is Alison Cypherbyte signing off. Until next time, keep your ledgers lit and your investments tight.